Hang on a second. So again, the purpose of the logic alerts is to help you learn how to read a chart. You want to know where to anticipate potential resistance, where to anticipate potential support. In doing so, you unveil the windows of opportunity that lie between, and that's where you find your best high probability, low risk trade opportunities. If you never actually trade a logic alert, you can still use them for the purpose intended, and that is to learn to read the chart. 410 weeks is a long time. It's over 7.5 years. But years before we introduced Logic 247, we had our original alert service, the concierge trade alerts. And they're different in a lot of different ways. For the purpose of this discussion, we'll just say this. Unlike the logic alerts, which can come out anytime around the clock, futures trade around the clock. We have traders around the globe. Our day session is the night session, and vice versa. The CTAs are typically published 5 minutes ahead of the Globex open. So the Monday session we're in right now began last night at 6 p.m. Eastern. So 5 minutes before the market opened, all of our traders had all of these targets. The S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So as we go through the individual markets and look at the individual charts, you'll see these targets are drawn out. Just remember, all of our traders had that information 5 minutes before the market opened. So we'll see how long my computer holds up. Yeah, whatever that glitch was, it played a warning beep, and then I got, wasn't the blue screen of death or the black screen of death, but it was pretty close. And honestly, the YouTube channel should be working now. It says I'm broadcasting live on this end, but don't look like it to me. Oh well. Sorry, guys. All right, let's go to the bellwether, the S&P 500 E-mini futures. So we talked last Friday about, and well, we've talked about it a lot. The fact that we haven't had a retracement back to the BBC. The last time price touched the BBC was on April 8th, right there. And that began this incredible rally that took us up to the new all-time historic high at, oh, look at that. That's wonky. Huh. Anyway, we've now gotten below the BBC, right? Price always reverts to the mean. In our case, the mean is green. It's called the BBC. It just stands for bull bear cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, we're bullish and expect higher prices. Lower prices, higher prices. It's pretty simple. The main takeaway is that price always reverts to the mean. And the pullback to the BBC holds more often than it doesn't. So I talked about this Friday. I said, if we close below the BBC, we're going to be touching it. I said on Friday, I said, now Monday, if we open Sunday night below the BBC, which we did, and we don't touch the BBC during the Monday session, then we should look for substantially lower prices. We almost made it to the 24% fib. There's the 38. Here's the 50. But this area right across here, that really has my attention. It's about 70, 90. See all these tops across here? Okay. But anyway, we did open last night well below the BBC, but now we've touched it. So what does that mean? It means we got a leg and a retracement, and so far the pullback is held. What we needed to solidify that we were going from a bullish to a bearish bias was to have a candle open and close below the BBC without touching it. We've touched it. Now, pullback holds more often than not. And this is really interesting because we got this huge leg, we got a retracement, and that pullback is held. However, the way this happened, we opened last night, we ran right up to the BBC, and so now that pullback is holding. So it's kind of odd. We're in the midst of a bullish and a bearish pullback, both holding, but we haven't officially gone to a bearish bias. We need a candle to open and close below the BBC without touching it. So, I mean, on Friday, we just ripped right through the BBC. That in and of itself is unusual. And this, as you can see, we've taken back not quite half of what was lost on Friday. We would need to get probably right up into this area, just eyeballing it. We can actually draw fibs. We can try. Doesn't hurt to try, right? So from the high to the low. Right there, that yellow line, we did hit. Man, my charts are really wonked out. We did hit the 50% fib. We spiked the BBC just enough to hit that 50% fib retracement. Okay, right there. I don't know if I can get this closed now. I don't want to wipe out everything. All right, we'll just leave that go for a minute. All right, let's go look at a 30-minute chart. See what happens. Almost afraid to find out. Why did the ES chart open like that? Now Valerie's got a way. Of putting that back together. How does she do that? I don't know. She can put the tab. She grabs it. You saw those little arrows pop up there. All right. Well, we'll just look at the ES for now. I'll figure that out later. So this was the sell-off on Friday. And we just kept dropping and dropping and dropping. We traded below the lowest weekly trading zone. We didn't quite make it to the CTA short target. Buyers did come in. Red and falling turned to blue and climbing. So we got a leg and a retracement, a leg and a retracement, a leg that got us above the BBC, and then the pullback hill. And then a leg and a retracement, a leg and a retracement. Now on this pullback, notice on this pullback, okay, blue and climbing never turned to red and falling, but now it has, which leads me to believe that perhaps, even though this pullback held, and this pullback held, and this pullback held, this one may not. So we got red and falling chasing price. So we got potential support right there. Can't, my window box is all messed up. I need to reboot and reload and see what happens, but I can't do that during the middle of a broadcast. Basically, call it 74.29. You got potential support there. And then down here, 74.10. And 73.86. 73.60. 73.56. Not good. Right. Now, this pullback could still hold. Okay. If institutional buyers keep hitting the buy side, we would take. This was the lowest weekly zone for last week. And it looked like we were going to stay inside of it. Now, these are last week's zones. The new zones don't come out till Monday morning at 6:15 a.m. Eastern. So any alerts that go out on Sunday night are based on last week's zones. But it's a new week. The new zones were published this morning. All of our members got them, 6:15 a.m. Eastern. So tomorrow, during the afternoon broadcast, you will see the new zones. These are last week's zones. So everything was cooking along just fine Friday until about 11:30. That's when the U.S. markets, or the European markets, closed. And it was just the U.S. and, man, the bottom fell out. So we often question during the live training room, because something almost always happens at 11:30 when the European markets close. That's also when the live training room closes. Are the European markets holding price down, or are they holding it up? Apparently on Friday they were holding it up, because once European markets shut down, bam. All right. I guess I'm just going to have to memorize that, or minimize it, because I screwed it up. Oh, you know what? I just saved it a little while ago. I can reload it the way it was. Yeah. So I won't lose too much sleep over it. Here's the Dow. Here's the huge sell-off on Friday from the Dow. Okay. These were the CTA targets last night. We didn't hit the short target. This was the 9:30 opening candle. Those brave souls. I can't tell you the exact height of that candle because of that. I don't know what that's all about. But anyway, this high right here. This is an area where you would anticipate resistance. And while it may not have hit it to the tick, it got real close. Okay. See, on the way down Friday, this candle opened and it was green. And then it got slapped down right to the zone. Remember, when price drops to a zone, we expect support until proven otherwise. When price rallies up to a zone, we expect resistance until proven otherwise. But we've had some very unusual days and some very unusual price action over the last few weeks. Now, we did a lot of consolidating last night over this zone. This is the lowest zone for last week. 55.45. I believe. Nope, there was still one more zone below on the Dow. Way down there. So the Dow did close inside the zones. And this morning we've had a leg up, and we've had a retracement. And this is support times 2. But we got red and falling overhead. Okay, so if price continues lower, the spot right here where we had the bullish cross, that's potential support. When the blue line gets above the green line, it's called a bullish cross. And when you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. I'd call it 885. 885. That's if we continue to move down. On the Russell, we closed Friday right at the lowest weekly trading zone, 2820/21. And so from that zone, that's where we opened last night. We closed. There was really no gaps to speak of. And I thought there would be, but there wasn't. So we had a leg, a retracement, not quite 50%, maybe 38. I don't know, that might be 50%, yeah. See how weird these fibs are. Huh, these actually worked. Kinda. So right there, that yellow line, that's the 50% retracement. So it looks to me like there's a little tiny wick back there touching that 50% fib. Literally to the tick. Okay, so then we got another leg and a retracement and a leg where we hit the zone. And of course, when price runs up to a zone, we expect resistance until proven otherwise, just like when it drops to a zone, we expect support. Only one of 3 things happens when price encounters a zone. 70% of the time, it's consolidation. 20% of the time, rejection, and 10% of the time, the slice. That's what a 30-minute candle slices through a zone like it's not even there. Now, typically when that happens and the move runs out of steam, price will retrace to the zone it sliced through and continue in the direction of the slice. But there was so much selling pressure on Friday, it didn't have a chance. Now, I know we haven't recovered from this high here, 50%. But, well, by golly, we did. From that high put in on Thursday afternoon. See, the vertical line separates today, Monday. This is last Friday. And then here's Thursday. So I was keying off of this high from Thursday, last Thursday afternoon, all the way down to the low put in last night. And we did a 50% retracement. Even a little better, we ran right up to the zone. Now this high right here is this low over here. So the NQ. All right, here's the damage done on Friday. Let's draw those same fibs. close on Thursday to the low of Friday. We did it. We hit the 50% fib retracement. That will probably buy us another leg to the downside, unless we can overcome it, and overcome it with conviction. It's up to the institutional traders. They're the ones who actually move price. We're just liquidity in the grand scheme of things. Crude oil. Now, this was interesting last week. You know, we have a standing rule for over 16 years that if price on any market hits the highest or lowest weekly trading zone by Tuesday morning, historically we see price end the week at the other end of the spectrum. Last week we hit the highest weekly trading zone on crude Monday. Not Tuesday morning, but Monday. Now from that highest zone back to the zone below, that's a $4 move from 94.20 to 90.20. That move down is worth $4,000 per contract traded. And the trip back up to the zone, that's another $4,000, but we went a lot further than that. We got substantially above the highest weekly trading zone Wednesday, Thursday, and then we made that drop all the way back down, that $4,000 trip from zone to zone. And then last night we gapped higher on the open. In fact, we gapped above the CTA long target. And we traded above the highest weekly zone, but crude has really, you know, I think some of those news articles I shared were written. That was prior to this, because crude's, but this has been really quite a line in the sand. Now, we're not really pattern recognition people, but if we were, that's certainly a head. There's a left shoulder, there's a right shoulder. And the neckline, I would have to say, is from that low, right where the CTA short target is, over to here. If we break that, then the way these kinds of things work, from the top of the head, and I'm just eyeballing this, so get a straight line. Okay, that's not all the way down. Need to pull it down a little more. Of course, that's too far. All right, we'll settle with that. Anyway, you take that and you move it down to where the neckline is. So the way a head and shoulders pattern works is, once you break the neckline, price should then move the same distance from the top of the head to the neckline. If that were to happen, that would put crude back around 82 bucks, 83 bucks, somewhere in this area right here. Again, it's the neckline's right there, from this low to this low. Now, red and falling has curled up under price and turned to blue and climbing. When that happens, that becomes potential support. So price will need to break that support, and this zone, which served as good support most of last week, because this was Monday. So it was support on Tuesday, it was support again on Friday. If we break that, Now, considering things in Iran aren't going so well, I don't know that we will, but we'll just have to wait and see how it plays out. All right, gold. Got whacked on Friday, hit the lowest weekly trading zone. Now think about it. These zones were published last Monday at 6:15 a.m. Eastern. Now this was Friday, but last night we got to last week's lowest weekly trading zone, kind of put in the double bottom there, and it really looks like gold wants to try to recover. Now, I know that's not 50%. What do we got? Almost a 38. And you should expect resistance right there anyway, just based on market structure. And then there's the 50%. So boy, gold gave up a whole lot on Friday. Yes, it did. And last but not least, silver. Silver trying to climb out of its hole that it dug. Now, there was the lowest weekly zone. We closed below the lowest weekly zone on Friday. And then last night, the first 30-minute candle, we hit the CTA short target, gave us a bounce, and then we tested it again. We spiked it. Finally, red and falling turned to blue and climbing, and then we got a nice leg and a retracement and a leg. Unfortunately, when blue and climbing gets directly above price, it can become potential resistance. So if we manage to trade through, you got potential resistance right here. And then you got potential resistance right here, right here, and right here. Silver's definitely got to climb a wall of worry, but keep in mind, gold gets saved, silver gets used. Over 90% of all the gold ever mined throughout history still exists in some form or another, whether it's bars or coins or jewelry. Silver, it's a different story. Silver gets used in industrial applications, in data centers now. I mean, silver gets, again, gold gets saved, silver gets used. But there's a finite supply of both. When God created the heavens and the earth, whatever he put in the belly of the earth, that's it. Because on the sixth day, he shut down production. So, silver, I think, has greater long-term upside potential, and gold now was saying that back at 20 bucks. So this sell-off has been rather brutal, bruised my ego, but yeah, we'll see what happens. We'll see if it keeps moving. Looks like the YouTube channel started working again. Huh, how about that? You just never know. All right, and on the daily, there's that 50% fib retracement. All right, to become a member, you need to get a hold of Valerie. You can call her at 949-42-EMINI. You can email her support@cfrn.net. If you call, you'll probably get her voicemail, so just leave a message. She will call you back. Either way, let her know that you're interested in becoming a member. She'll send you all the information you need to make a well-informed, intelligent decision as to whether or not what we do is right for you. Once you become a member or a passport holder, you get 2 hours of live training every trading day. Now that's really important because 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. There's plenty of people that want to sell you their indicators and their oscillators and their bots and their algorithms and all that good stuff. But finding someone who will actually spend 2 hours a day with you, teaching you how to trade, wow. If you find a place like that, other than us, let me know. I'd really like to see that. But that's what we've been doing now since 2008. Yeah, really since 2005, but in our current incarnation, 2008. Now, on top of 2 hours of live training every trading day, you also get private one-on-one mentoring. There's no extra charge for that. You just have to ask. The strategy you learn and the indicators that you own as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETF, it doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you'll get the Logic 247 alerts, which will help you learn how to read the chart. Every evening, 5 minutes ahead of the Globex open, most days, you get the concierge trade alerts. Every Monday morning at 6:15 a.m. Eastern, you get the weekly trading zones. And not every Thursday night. We're on a summer schedule now. I think we're going to do one workshop a month through the summer. And then we got some changes coming this fall. So we'll keep you posted on that.
Yes.
Last but not least, you get the golden keys that open all the private channels in Telegram. It's everything a trader needs all under one roof. One low price. And what I see... Yeah, Gordon, just hit me up in Telegram and we'll work it out. Once I get my computer problems fixed. I just wanted to show you one thing real quick.
Okay.
Yeah, my computer wigged out during this broadcast.
Oh, no.
And it had something to do with a Chrome error. I don't know. I got a lot of tabs open. Maybe that's it, but I don't have any more than normal. So I don't know. But anyway, this was the sell-off Friday. And then we bounced right back up to the BBC. And then we poked through it. I drew fibs from Friday's high to Friday's low. And we touched that 50%, that little wick sticking up through the BBC. Hit that 50% fib right to the tick.
It's perfect.
Yep.
Perfect.
Yep. Okay, so Michael's going to give us a recap of everything that happened this morning in the live training room.
I will.
And then do a little live trading as time and the markets permit.
I will do that too. Here we go.
All right, it looks good.
Excellent. All right, now I did get this to work the other day. I don't know why it wouldn't work on Friday when I was trying to do it, but it came around later on in the day. All right, what I mean is I couldn't get it to publish, so it wouldn't go to the right page. So let me just get started. Good afternoon, everyone. Today is Monday, the 8th day of June, 2026. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Just click on that purple button. Once you do, it's going to bring you to this registration page where all that we ask for is your name, your email, and your phone number. Down at the bottom, make sure you give us a TradingView login ID so we can get you with indicators on your desktop. Get your indicators indicating on your desktop. All right. All right. So we had a really slow day today. We're up 372.50 this morning. Kind of putting a damper on all those $1,000 days we had in a row. We had 5 in a row, and then we had an 880 and a 1300, then a 492. Then we had the highest day we've had since April, I think, and then down to 372. Anyway, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 8th day of June, 2026, like I said, and we made 10 ticks on the NQ, 55 ticks on the Russell. We lost 28 on the YM. We traded gold today. We made 10 ticks on gold in 2 trades. Made 7 ticks on the ES. Today it took 12 minutes and 3 trades to get to the goal for the day. At that point, we're up $175 with 1 contract, or $17.50 with 10. And we took 26 trades with 5 stop outs this morning. That puts us at 80%. 80% of our trades this morning will break even or better. Okay. And so on the month, that puts us at $6,052 over 6 trading days, averaging $1,008 per contract per 2-hour trading day. And on the year, $100,672 over 95 trading days, averaging $1,059 per contract per 2-hour trading day. Now, if you were to do everything exactly like I did and quit trading when you get the goal for the day, have all the same slippage and everything else, then so far this year, you've only had to work 14.66 hours. And you'd be up $46,442, right? Same slippage and everything. That works out to $3,166 per hour, which is pretty good money to most people. That's it. Let's get into the trades. All right, so things are all red right here. Now, the NQ, we didn't trade the NQ much at all this morning because it had a huge spread in it. But the NQs, everything's all red right here. The ES, I believe, did that hit it or did it not hit it right there? It was a tick above it. It didn't hit it. Did the NQ hit it? Oops. Come on. Did the NQ hit it? No, the NQ was a tick above too. All right. Well, they were both pretty close to giving trades. We'll look at the Russell first today, the trades we did on the Russell. There's not that much to look at here. There we go. Our first trade on the Russell, we picked up 12 ticks. 12 ticks on the Russell, and then the next trade on the Russell, we picked up 7 more to get us to 19. Then we picked up something else, 5 more to get us to 24 somewhere. And then we stopped out, went from 24 down to -1. Then we picked up 10 to get us to +9. Then went from 9 to 34, then 34 to 44, and then 44 to 55 somewhere. And that was where we ended it on the Russell this morning. Now, right now, you see it's already in the overbought, and it's not anywhere near the mid band. So what we have to have is an up close on this. It's going to make it go sideways, and then an up close on the next one that's going to hit the mid band, and then a down close. So it's probably not going to turn into a trade. You'd have to have something like this. In the trigger, it'd have to go sideways a little bit in the trigger. That's probably not going to happen. Okay, so what's probably going to happen is it'll come out, it'll have a down close, and it'll come out of the overbought. It'll have to go down and back up and then down again. So we're nowhere near a trade there. There it is right there. That's the first part of it. Down, reset the midpoint. Now it's going to go all the way down, then all the way back up, and then back down. All right, so the YM, I messed up on the YM today. We wouldn't be as negative if I didn't mess up on the YM. All right, I guess I totally messed up on the YM. We wouldn't be negative at all if I didn't mess up on the YM twice. This first trade here, we picked up 5 ticks. Now, that was a mistake because it wasn't actually off the mid-band and it didn't come out of the oversold. So the valid trade would have been waiting for it over here, and I probably would have gotten more than 5 ticks on that. Then I took this one and I stopped out. That put us at -20. Then I took this one. I took a short with a green background. That was the mistake. And that put me down to -40. And then we had a +12 somewhere. I had one decent trade after that. I think that wasn't it right there. I don't know where it was. I think it was right here. We had a +12. That got us to -28. And that was it. And that was it for that. We almost have a trade here. Almost. Not quite. Okay. Hang on just one sec. blow my nose. On the ES now, we had, let's go back to the very beginning. To the very beginning. Here we go. On the ES, our first trade here, we picked up 12 ticks. Then the next one, 14, that got us to 26. Then we had a break even. And from 26, I didn't write this one in. Whatever that was, we got that. Then we had another break even, and then we stopped out. And that stop out brought us down to, well, I wrote down 16. And then we had a break even, another break even. And then from 16, well, this was actually a +2 in there somewhere. One of those break evens I actually lost a tick, and that brought us down to 15. And this was a +2 that got us to 17. Then we had another break even, and somewhere in here we stopped out one more time. So I missed a stop out and I missed a deposit we gained somewhere. But I wrote down that we ended up with 7. We actually ended up better than that. Oh, here was the stop out right here. It was a stop out. And I wrote down that we ended up with 7, but we actually ended up better than that. There was a lot of movement here during the break. All right. And that was the ES. Now the NQ, we hardly traded at all. We had just the one trade right at the very beginning. I just said we picked up 10 ticks right at the very beginning. There was a huge spread in the NQ. That's why I didn't trade it. I switched to gold, and I'm not going to bring up the gold chart, but in gold today we had we had 2 trades, and in those 2 trades we ended up with 10 ticks. All right, Gordon, did Dwayne respond to you already? You probably did already, right? Since you typed that in at 1 o'clock. Okay, good. I figured you probably did. Okay, good. All right, so that was it. So we have 20 minutes left here, guys. 20 minutes of trading. That's good stuff. So Gordon, what we were talking about earlier today, and what Dwayne actually referred to, and what I also referred to this morning, is we expected a 50% retracement here and get into the BBC. It's usually going to bounce off the BBC. At that point, yeah, about options. At that point right there, if you'd have bought SPY puts, or if you wanted to get something cheaper, you could buy the XOXS. Well, you can't really buy the XOXS calls. You buy the XOXL puts. Those would be cheaper right there. XOXL puts right there. Okay. The SOXL calls are going to be expensive, but the puts would not be expensive right there. You see what I mean? And, now I went and said that, but I'm just gonna make sure. I'm just gonna make sure that that's actually the case. Let's see. Oops. That. Go to trade and options and yeah, the puts is still pretty expensive. The XOXLs are just way more expensive than the SOXSs. So in that case, you could have bought SOXS calls because you expect the market to go down. Okay. Does that make sense? Because the calls, the XOXS calls are only $57 a piece, $58 a piece. But the SOXLs are $2,000. Yeah, probably. what I would expect is, let's go out there again and see. It should find support at Friday's low. I don't think we're gonna have another sell-off like Friday, but it should find support at Friday's low down here. But if for whatever reason there is another sell-off, then this is your leg length right here. It's actually from here to here is your leg length. This would be something like this. From there to there. Oops. 7,200. Now I don't know if that matches up with some weekly trading zones and things like that. I guess it probably does on the ES. It's probably something way down there. But the news that came out Friday, did we have news today? We should have had some news today too. We should have news all week. We just about have trades everywhere right now. Right, the ES needs to down close. The YM needs to hit the mid-band. The Russell needs to hit the mid-band. And both of those need down closes after hitting the mid-band. Neither one have done it yet. Okay, but the ES definitely has. It's got a high at 30.50, so it's going to have a low 28.50. High at 31, it's going to have a low 29. All right, the YM is now hit to 885 down to 865, and the ES is almost too far away now. It's got a high at 25. That is too far away. My order was a couple of ticks lower, so it didn't get filled, fortunately, because it's not a valid trade. The Russell is now in position too. The Russell and the YM are both in position for a trade right now, even though all the other ones are going up and flipping the YVR. 62.7 down to 67 on the Russell, and on the YM, it's got a high of 888, so it would be 68. Now, these two are committing to the downside, and these two have flipped the YVR. It's a conundrum. What is going to happen? We're just about to have a long trade over here on the NQ. Not too far away on the ES, and we're pretty close to having short trades on both of these. So the NQ, where I have very limited trading today. Hang on. Actually, just gave a long trade. Here's the NQ one. Okay, that's starting around a little bit. That just gave it all to me. Okay, so the NQ gave me everything on the upside, and I'm in the YM right now on the short. The Russell never gave the short, but the YM did. So I just got 50 ticks on the NQ, and I am probably going to lose 25 on the 25 on the YM. Write it down. And the, I'm sorry, not the YM. Yeah, it is the YM. The Russell's the one that hasn't triggered yet. Okay, so the YM has a stop up here at 93, right there. I lost mid on. And the Russell has a high here of 63.4. So it'd be 1.4 is what you'd be selling. Okay. Oops. I was trying to bring that DOM over to show you. Here it is. I gotta go find my YM. Still in that trade. Oops, that's not the one. This one. Okay, well, we didn't stop out on the YM. Down close on this bar would be really good for this trade on the YM. Okay, and we got it. And now the Russell's about to trigger. This needs to go just a couple more ticks. Russell did trigger. The YM is going now. It's plus 11 on the YM. $20 on the YM and 5 on the Russell. Okay, 20 on the YM, 5 on the Russell. The S didn't give a trade. The NQ didn't give a trade. Another trade anyway. I think that was 28 on the YM and 5 on the Russell. Okay, that's good stuff. There was no news today. The first week of the month is usually when the majority of the news. I guess I might look at there it all is right there. There's all the high impact. So tomorrow we have existing home sales, and Wednesday we have all this stuff. Inflation rate, core inflation rate, CPI, all that stuff. And Thursday, all that stuff, and then Friday, that. So this is big stuff here. It is. It sure is. All right. So we now have about 11 minutes left. So far, we're pretty good. 3 trades, 3 wins. I think what you're going to see is the markets are going to set up for that news that's coming out before it comes out. So you're going to see sell the rumor, buy the news, or buy the rumor, sell the news. It's going in. It's going to reverse, is what I expect. That happened on Friday. I think I showed you guys a picture of what happened on Friday. Let me see if I still have it. It was, oops, not that. It was some analysis, this analysis on Friday. It was Thursday, where this was sent to me asking me what I thought, and this was Thursday night, and I said, well, this high impact news due out Friday morning. And I said, so I think what's going to happen is this is the buy the rumor part, and it's going to sell the news when it comes out on Friday. And this is what actually happened. So it totally did that. And I expect that'll probably happen again this week. It might go in the other direction, though. We'll see. We sell the rumor, buy the news. That's unusual. But we need a down close here on the Russell right now. It has a high of 61.5, so you'd be selling 85 or 8.5, 1.5 to 0.5, 9.5, sorry, 9.5. On the NQ, there you go. Need that to get down here to 8.5. There it is. And we're at 5 more ticks on the Russell. That's not a trade there on the YM. It didn't hit the mid-band on the down close. Nothing there, nothing there, nothing there. Okay. So, day's range, they went all the way up to 140 today. I took 5 ticks on that, right? That was the one I took 5 ticks on. Took 5 ticks on this one and that one, I think. Just making sure. All right, the NQ right now is pretty close. It's got a high of 1775, so 775. That's nothing. And nothing on the NQ. Cancel. Cancel. It's not a trade here. It's got to have a down close and then an up close on the ES. The NQ is not a trade either. Hasn't hit the mid band. All right. What needs to happen now? Huh? I really don't see anything happening right here. We're not quite there. We had to go full cycle over here, and we haven't. We did go full cycle here. It needs to get into the overbought on that last bar. All right, so we're getting a little bit of movement up right here. It is got about a minute and a half left, so we could still have a trade here. We're not going to get anything on these guys. But these here, they're too far away right now. They're going to reset the mid band before they see how far they're in the overbought right here. First time they get a down close, it's going to take it out of the overbought. It's going to reset the mid band, the midpoint, and then they're going to have to go all the way down and come all the way back up. Okay. So we're not likely to get any trade there. As a matter of fact, we're not likely to get any trade anywhere right now. And if we look at this, let's go out here one more time, Gordon, and take a look out here. See, we found resistance at the 50% retracement. And look left, Dwayne, I'm sure pointed this out to you. If you look left right here, we found support right here. All right, so that support's probably going to hold.
Important price, important area. Yep.
That's probably going to hold. If it gets back down there, it's probably going to hold. We'll see what happens tomorrow because the CPI and PPI come out Wednesday, Thursday. So they'll probably price in whatever that's going to be tomorrow. So tomorrow will be a good, at the end of the day tomorrow, whatever happened during the day tomorrow, it's a good time to go opposite of whatever happened during the day tomorrow. All right, if there's a big update tomorrow, SOXS puts would be what I'd go for if there's a big update tomorrow. At the end of the day, if you want to play it that way. And if you wanted to do it, I mean, it depends how you want to do it. You could buy you buy one of the XOSLs and like 40 of the puts and weight it to one side rather than the other, because it's going to be, the difference is going to be over 100%. On whichever side is right, it's going to be over 100%. So you could bail out of the one that's wrong and still make a bunch on the other one. But, or you could just go one-sided, completely one-sided, like I just said. It's up to you. That's what I would say. All right, sorry, I just ran over explaining all that. So let's go back here for a minute. If you have not taken a free trial with us, go here to mytradingiq.com. I clicked on that. I thought, okay, go here to mytradingiq.com. Click on the purple button. There's no credit card required for the trial. Just click on that purple button, and it's going to bring you to this registration page. Just fill out this registration page. Once you do that, you'll be sent everything you need to get into the room in the morning. Make sure you use the TradingView login ID down here. Okay, so we can get your indicators indicating for you on your desktop. And that is it. With that, I can pass it back out to Fabulous. Wait, I got to fill out the thing. I didn't fill out the thing.
Got to fill out the thing.
I didn't fill out the thing. Sorry about that. I got distracted.
Stand by for the filling of the thing.
Yes, I'm filling the thing. Today on the NQ, we made 50. On the Russell, we made 10. On YM, we made 28. So that's a good number. I don't know what it is, but it's a good number. 4,400. Okay. Nice. We didn't trade any. Yes. Yes. And all the trades were good ones today. So we didn't have any stop outs in this. So that's going to be 100%. So I fill it all the way out. We had 4 trades with 0 stop outs. And we had 20 minutes today. Okay, so this is how we ended up. It's our 106 day, keeping track of it. 50 on the NQ, 10 on the Russell, 28 on the YM. So $4,400 or 440 with one contract. That's still awesome. 440 in 20 minutes is a good number. We had 4 trades that were all good. So 100% of our trades are break even or better. And we did it for 20 minutes today. So this number is actually going up. We're at 16.67 minutes is what we're averaging in trading time. And this number is going up too. We're now averaging $114 per contract in those 16.67 minutes of trading every day. So I already did all this stuff. Take a free trial here by tradingiq.com. All right, now with that, I can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. The thing is done.
All righty. recap of the morning session.
Today it took 12 minutes and 3 trades to get to $1,750.
Good job.
Thank you very much.
All right, guys, we covered everything in as much granular detail as possible, considering my charting issues and computer issues. So I'm going to do some testing here and see if I can figure out what the issue is, but we'll wrap it up with our good word for today. Practice God confidence rather than self-confidence. 1 Corinthians 15:10. It was not I, but God, who was working through me by his grace. Pride promotes self-reliance. It tells us we can indeed do things on our own. In our attempt to walk in self-confidence, we slam the door in God's face and shut out the work of the Holy Spirit, our helper. Paul was educated, sophisticated, and consecrated, yet he humbly declared, I am the least of all the apostles. In fact, I'm not even worthy to be called an apostle after the way I persecuted God's church. But whatever I am now, it is all because God poured out his special favor on me, and not without results. For I have worked harder than any of the other apostles. Smells a little like pride, Paul. Yet it was not I, but God who was working through me by his grace. No pride. No matter how much ability you possess, without God, it will only take you so far. Jesus said in John 15:5, I am the vine, you are the branches. If you remain in me, and I in you, you will bear much fruit. Apart from me, you can't do anything. So the source of our confidence should be God and not ourselves. When the plans of those walking in God confidence go awry, they are wise enough to subordinate their desires to the sovereign will of God. They quickly remind themselves, many are the plans in a person's heart, but it is the Lord's purpose that prevails. Proverbs 19:21. They are convinced that God has a higher purpose for their lives and that no man can thwart it. So practice God confidence rather than self-confidence. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.